All right, hey, what's going on? I wanted to jump in today and just show you guys what I'm looking at for the Bitcoin chart as we close the week here of January the 6th, 2024. And I'll go ahead and make this a little bit smaller, drag that into the corner. All right, and the focus today is going to be looking at obviously the larger term time frames. We're looking at the daily, the weekly. Also looking at the market cap, I think it's really important to to pay attention to what's going on with the market cap as we push up on that $1 trillion mark for Bitcoin. And just a reminder, if you do want to use some of these tools that I'm showing in my videos, you can come on over to tradingview.com. I put the link in the description. And you can follow me here, just like any social media site. You can kind of follow me, see my ideas. I do try to post ideas, once a week kind of thing where I update my forecast. But it's a really handy tool if you are interested in technical analysis. This is by far the best website that I found for using technical analysis. And I've been on here for I don't know, let's see, like 6 years. So this is my profile. If you guys do want to come check it out. You can see I mostly report on cryptocurrencies, a little bit of indexes as well, just looking at the S&P and the Nasdaq and a little bit of individual stocks as well. But primarily, this channel is really focused on Bitcoin. It is my favorite asset. It's the best asset for trading in terms of technical analysis. You can see some of my predictions here coming true. But anyways, head on over to TradingView. You can see the link in the description. So this is going to be pretty quick. I just wanted to show you guys what I'm looking at on the BLX. So we're looking at Bitcoin. This is the Bitcoin Liquid Index. So this is the aggregate, Bitcoin price across all of the different exchanges. All right. So here we are, guys. Now, where we're trading is at these extensions. We know that anyone who was around for this bear market in 2018 is going to take a Fibonacci tool, okay, from the top of that cycle down to the bottom. So that's what gives us these black horizontal lines across the screen. These are essentially the Fibonacci sequence levels, and we can see that we look left. We look at the structure in the past to see which levels got respect, meaning which levels were showing resistance or support. And there's a whole bunch of ways you can kind of figure out where majority of the trading volume was happening. But I'm pointing this out because this actual Fibonacci, you can see once we started here, we came up, hit the 61.8, right, down to the 50, up to the 61.8. I'll zoom in a little bit. It's probably hard to see. But essentially what I'm trying to point out is when you take this Fibonacci, and I'll kind of just loosen it up here so you can see what I'm doing here. So this is the Fibonacci time indicator. Why can't I see it? Okay, there we go. So I'll lock that into place. But what I really want to focus on right here is the fib price tool. So when you grab this tool, you can anchor it to the top right there, right around the 19,700 level when we peaked in 2018. And then we had this massive bear market down to 3K, right? So we're like, all right, well, that's a huge move. We can easily and clearly see that is a nice move. And again, we're on the linear scale here. We're not on the log scale. So there's a little bit of a difference between drawing your fibs on the log scale versus the linear scale. But for this specific example, we are just going to show the linear scale. So once we do that, we're like, okay, here's got to be the bottom. So as we're rallying here and we're getting into 2019, we're expecting to see this thing pump, right? And that's exactly what happened. And it pumped all the way to this 61.8. So that's 61% retracement, meaning from that top to that bottom, we actually recouped 61% of that all-time high. And then that's kind of where we hit that resistance. So we hit the resistance at the 61.8, and now I'll zoom in. And you can see we kind of got sent down, and this is weeks, right? We're on the weekly chart. So just keep in mind, this is weeks of time going by as we're kind of hovering around that 10K level. And we're kind of bouncing off all of these fib levels, showing the respect, right? Down to the 23.6, back up to the 38.2, back down to the 23.6. And then we had like a month and a half here, guys, of just straddling this 38.2 before it broke up to the 50, one more retest of the 38.2, and then we were off to the races. So now, as you can see, we hit this one. If you look to the left, you can see this is the top. So previous tops, if you look across, are going to become resistance, which we saw a little bit here, right? But then we finally broke through, and this is where we can really rely now on the extension levels of the Fibonacci's. These are still Fibonacci's, still derived from this move, but now we've got the 127, the 141, and the 161, and so on. And we've even got, the 261, 361, and then 461 is usually where I would draw the limit. So see how 461, we didn't even quite get up there. But if you do look at this price action, guys, look what happened. We hit the 241, back down to the 161, right? Kind of pumped to the 361. Look at that. Right back down to the 161. Kind of hovered around these levels, right? Back to the 361, back to the 2. I get it. I'm just showing you that these levels, guys, have been massively in play. And if you really wanted to drill in and see the respect that it gets, you can pull up the volume profile and you can draw it and you can see, okay, where did all the volume trade? And I guarantee you will see all the volume trading, like all the big volume bar spikes, will be at these levels. Okay, so this is like our framework. We use these Fibonacci's as a essentially like a scaffold. We kind of want to, we use it for guidance, okay? For entry, exit points, and potential just areas of resistance and support. So to finish up, right, when this bear market started, look exactly, we came all the way down. We kind of hit the 161, kind of battled it a little bit. Full on fear at that point took us down even farther down into the 1, back up to the 141, guys. You see this? You can't make this stuff up. Like this stuff, when you see this huge move like that, that's like a 50% move off the 1 just to the 127. I mean, that's just a tasty move right there. That it only if you had fibs, you can really understand why that came up there and hit that resistance, okay? Back down to the 1, and then look at where we came down. We came down all the way into, all the way into that 78.6. See that from the previous cycle? So if I scroll back to the left now, and you can really see that this was the 78.6 level from this move. There's the 1, 78.6, 61.8, and 50. Okay? So in that last cycle, right, we were really battling the 50% fib before we really were able to confirm a breakout into new all-time highs, right? And you can see big 50. If I put it on the if I put it on the line chart, you can only see the closes. You gotta get some of the noise out of the way with the wicks. So you can see the 50. We really did not break above that 11,800 level for almost 2 years before really confirming that next bull market. All right, so that's kind of happened right around here, around September of 2020. Those were the days for anyone who was around back then. Give me a shout out in the comments. I would appreciate that. So those were the days. We had a lot of euphoria back then in 2021, then a bit of a, obviously a bear market. And now here we are in 2023 where we pulled all the way back up. Now, what I want to show you guys now is, look, these extension levels are still in play. Look, so we rallied up at the beginning of the year. Where did we get resistance? That's the 161. Look, that's the 161. We came back down to the 141, up to the 161, back down to the 141. I mean, just look at this, right? So then we finally broke out above the 161. Where did we jump to? We skipped all of this price, right? Look, we just skipped it. And then we kind of got a little bit of, let's see, we kind of got a little bit of a price action there at the 2. See, that's a 1, 2, 3 weeks of kind of sideways action straddling this 2 Fibonacci extension. But then we finally broke out. We pushed up, hit the 241, back down to the 227, up to the 241, back down to the 227. Now, I'm going to drill into the daily now so we can see what this price action looks like. So look, here's the 2. Here's all of these days just chopping around that 2. Finally broke out above it, hit the 241. Look at the respect here on that 2.272, right? 2.272, big support at that level, big support there as well. Even when we dipped down on Thursday, a couple days ago, boom, it got gobbled up right back up to 241. So obviously everyone's looking high, everyone's looking up, everyone's kind of expecting this to just continue to pump. And remember, if we break this 261, it's very likely that we actually will just pump all the way up to this 361 and test pretty much previous all-time highs. right? So if we look to this left, look, so see all of this stuff right up here, this is going to be big time resistance, especially if we get this all in one move. There's going to be plenty of downside. Probably March or so, right before the halving, we could see a big dump as the Fed starts to make a pivot towards lowering rates, of course. So that's what we're keeping an eye out for. The one thing that I do want to watch now is to keep this trend. So I really want to draw a trend line now from the bottom at that 16K level. And I want to extend that out to these sort of wicks down here around the 25,000 level, right? And I want to make sure that we do not lose this trend. This is the key. We can come down, guys, all the way down from here. Let's say we get a bit of a push, and then some macro event happens, like we get some bank failures or who knows what. We can technically, right? This is technical analysis. We could drop, 36%, right, by March of 2024 and still be in this bull market. So I think a lot of traders right now, from a psychological perspective, are kind of hoping for that. They're kind of expecting that this kind of cools off. We know a lot of the oscillators, the RSI, the moving average, the MACD, they're kind of all extended out right now. They're overbought, right? So the traders, I mean, it's scary to try to take a short 3 months out from the halving on Bitcoin. I don't know who has the balls to do that, but technically that would be the trade just from a trader's perspective. But since we're not traders, we're investors, we can really stick this out for the long term, right? And we can see this as a buying opportunity. So I really just want you guys to be prepared. If you do see some drawdown, maybe an 8% down day, maybe a 15% down day, maybe we just get a massive bear market, bear candle, and we kind of turn bearish for the next couple of months. That's fine. That's going to be probably the last chance to accumulate Bitcoin at a fair price. I don't have any of the other indicators that I would apply as well to try to get some sort of confluence and build a probability that where the price is going to go. But this is really just for high level. I want you to see the respect of the TA, and I want it to help you feel comfortable with all of these moves. I mean, look at this move, guys. Remember back in the summer of 2023 when we first pushed up and we hit that 127, and then we sold off. Like, this was a 30% sell off. What was it? No, okay, not quite. Sorry, 20%, right? Boom, 22%. So anyone who had the fib on the screen would have known that that was probably a good buying opportunity, right? And look what happened. It got gobbled up in 2 days. Like, you didn't even have time to check the price. Like, you didn't have any time to gobble that up. But anyways, it got gobbled up and pushed up higher. And then same with this, as we started to pull back. And again, I do want to just point out some of this nice structure that we've pointed out in the past, where we had this like sort of descending channel here, right? That kind of got broken and broke out above it. So just another kind of example of sort of descending trendline breakouts and what that could kind of look like. Because look at this. If you take the bottom two, like, this thing was trading in the channel all this summer, right? Just channel trading, just trading. Finally broke out, boom, pushed up. And then even this, I think this looks like a retest, right? So you can probably, let's see, kind of. So like when we came down here, they got the retest, right, instead of push up. But that's history now. We don't care. You know, we're in the future now, so that's kind of, it's just for learning purposes. We just want to know, okay, what is this market really looking at? Like, do they respect breakouts, like descending wedge breakouts? It looks like it. Do they like to see a retest before pushing higher? Looks like it. Are these fib levels in play? 100%. These fib levels from the last cycle are still in play. So that being said, here we are. We're chopping around the 261 and the 241s. We're chopping around basically the 2 level extensions, the same way we were back here, guys. Look, if I zoom in to this price action over here, you guys remember this. I know you remember this. Look at this. Boom, 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 boom. All of this price action. I can pull up a volume profile. I don't have to, but I already know. You'll see volume spikes on every single one of these lines, just proving to me, giving me the confidence that, hey, I drew my fib on correctly. I could trust these levels. Everyone's looking at it. So that being said, where do I see the future for Bitcoin? Well, like I said, everyone's kind of hoping for a pullback now because we're in the sort of the greed phase where everyone's kind of getting FOMO and um, there's a lot of people who started to sell in this panic now, and their average sell price is a lot lower than the current market price right now, so they're panicking because now they have to buy back in at a higher price than they sold. So a lot of market sort of psychology dynamics going on here. But at the end of the day, guys, we're 3 months out from the halving. Look, there's July. Okay, there's July. All you really have to do is now take a fib now because we're saying, hey, you know what? We just completed another market cycle. So we can say, hey, let's take the top there, just like we did last time. I can't see it. Oh, because it's gray. Give me 1 second. Let me just fix the settings here. So we're essentially just gonna do exactly what we did in the last cycle in terms of Fibonacci's, where we take, okay, we'll be like, all right, let's take the 1 and the 0. Let's take the 1 and the 0, and let's make it actually a brighter color just so you guys can see. We'll make it like whoops. We'll make it like a red, just for the purpose of this video. All right. So, and what I also want to do is I want to extend. What is this? Okay. And I want to extend this right so that I can see where it coincides. And I also want to put on the prices. So now I can see where each one of these fib levels actually coincides with the price. Okay. And look at that, guys. So here, let me hide this. I'm going to hide this one here so you can see the red. So look, the 1 and the 0. Look at where we are right now, guys. This is the 50% fib. Just like I pointed out at the beginning of the video, where did we get stuck in this bear market or whatever, this market cycle? It was the 50% fib. That's where we got massive resistance, like many times right here. This was the 50%. It was around 11K. So now the 50% retracement is 42K. That's a key level. Look at this. So see how we're pushing up on this and we're really starting to chop around for weeks up here? Makes total sense, okay? So very likely that we should see, look, 38.2 just got dusted, right? This 38.2 kind of, it got dusted. So what I know from experience is usually you want to at least test it as support, right? If the level gets dusted, we usually come back down to test it as support. Now, not all the time, but for a big level like the 38.2 on a weekly time frame, I think the odds are pretty high. So just keep that in mind. The 38.2 Fibonacci's coming around $36,000. The 50's at 42,000, and then the 61.8 is at 48K. So there's going to be tons of resistance here at that 61.8. We could push all the way up to 48K, guys. Fake everyone out on the breakout, and then just pull back down and just crush everyone's dreams and pull back down like a 30-40% move, where everyone panics and sells again, and then we continue on the bull market. So I do think that by the end of 2024, we will be pushing up to new all-time highs. Okay, so we do still have to clear some levels. 78.6 is going to be a big level as well. This is 57K. So remember, the 78.6 is actually where this bear market stopped up on the old bear market. Remember, I just pointed that out. Rewind the video if you want to take a look. But remember, the 78.6 was like right around here, and that's exactly where this bear market came in. So that's a key level, right? 58K is a very key level. So what I'm expecting, guys, is by the time we get into 2025, I think we'll be somewhere up here around the 161. I think we'll maybe get to the 261 this time, around 150K. But I don't think it's going to push up much higher than that in this cycle, just due to the law of diminishing returns and the amount of capital that it really is going to take to push up. Right now, we're kind of edging around the $1 trillion market cap for Bitcoin. Let me just pull that up as well. I did say that I would touch on the Bitcoin market cap. Also, Bitcoin dominance, guys. Look at Bitcoin dominance. Back around 50, 55%. That's a huge move. As I've been saying, time and time again with the altcoins, you have to have a huge stake in Bitcoin. Do not be in altcoins at this point in time. Maybe later in the Bitcoin cycle, after the halving, after we've already hit new all-time highs, you can start kind of, speculating on some of these altcoins that they could outperform Bitcoin. But when you see Bitcoin rallying like that back from 40% all the way to 50% of the market share, that's a huge move. So Bitcoin is very strong right now. I do see it going a lot higher. Now, where is the Bitcoin market cap? That's what I really want to see here. 861, there it is. So we're at 861 billion. We know that $1 trillion mark for Bitcoin. Let's get rid of some of the volume profiles. But look at all you have to have on the screen here is the 500 billion and the trillion. So look, guys, this is key as well. Where we're looking at this, right? You can clearly see that 500 billion mark is where a lot of guys were placing orders. Okay, we have to hold that from a psychological perspective. So we're holding onto that 500 billion. We will get big time resistance most likely at that $1 trillion mark. Get rid of some of these as well. But essentially, the amount of capital it's going to take to get us to new all-time highs. So if I take the same fib from the top to the bottom, we bottomed. Look at this. We bottomed out at 333.333 billion. Okay, that's not a coincidence. That is not a coincidence. These numbers all have very significant impact. They have a very strong value in the market. When you see numbers like this, 333, that's not a coincidence. Okay, so that's why I like to look at this market cap chart from time to time, because it does really add a whole edge, a whole another level of understanding. And I'll close this up as well. Okay, but essentially, look, if we were to get up there to the 261 extension, this would become a $3 trillion market cap. Okay, so that's adding $2 trillion. And it's totally possible when you compare it to like gold's market cap or the market cap of the debt market, for example, even the stock market. That's totally possible, especially if the ETF comes into play and we actually do get physical delivery of the futures market in Bitcoin. That is totally, like 3 trillion is no problem. But just keep that in mind. Like, to get from the 261 to the 361 is a whole nother, that's another $1 trillion. So I'll be watching this carefully. I'll be updating you guys with this price action going forward. If you haven't already, please hit the thumbs up button and subscribe for future updates. It's going to be important. I think I'm going to be able to provide a lot of value in terms of timing in this market. I've been watching it for years. I feel good about it. And I feel great about where the price action is right now, around this 44,000 mark. It is a key level of resistance. I just want to stress that. It's still a fair price for the long term. At this 43, 44,000 level, in the future, it's going to look like a steal. These levels are going to be very much desirable when we get up there into the extension levels and into 2025, I believe. So keep that long-term perspective alive, guys. Don't get caught up in the daily, minutia of the 4-hour time frame, the daily time frame. A lot of it's just manipulation with the exchanges and big whales kind of just trying to get lower prices essentially. But that's what I wanted to cover in this video. I hope you enjoyed it. Stick around though, because you're gonna need some help in the future with the TA, and I'm happy to help. All right, thanks again, and we'll see you on the next one.